Great. So welcome you all once again to today's section. Today I'm going to look at for two important standards. But first, let's look at for IAS 38 intangible assets. So IAS International Accounting Standard 38. It talks about intangible assets. Intangible assets. You should know everything about it. How we record them in the books, very important. Then we move on from that. Okay, so let's kick start. Now, if you take every standard or the accounting standard that we have, they give what you call specific requirements, how we should treat that item. So every standard prescribes a particular way to treat a particular transaction. So IAS 38 prescribes an accounting treatment of what? Intangible asset. That's the simplest section. Good. Now, this standard was released in 1998. 1998, that's when the standard was released. It has been modified or has been like shaped or revised and updated. Don't forget that the IAS version ended at 41. So if 38 was released in 1998 and 41 ended in 2001. So it tells you that they did a good job. Now, I will list what you're supposed to know under this section. Supposed to know one, the objective of this standard. Objective and what? Scope. Scope simple means the coverage. I think about all intangible assets, not at all. They are exceptional to this. We look at them. That's number one. Only 5 items that you need to know. Number 2, know some terms. They will ask you, define intangible assets. Explain how they should be accounted for. So terms. Every standard comes with some terms. Have you seen if you have any gadget, it comes with what manual, it comes with some how to fix certain things. The same thing in here. Let's look out for 3. Number 3 is recognition. Recognition, meaning how it must be recorded, the treatment. Treatment. That is that recognition simple means what? Accounting treatment, or how it must be recorded. The recording. That is all. Then number 4, we will look out for measurement. Now, before I go to the measurements, there are some specific 3 items here that you should know under the recognition. So when I reach there, I'll let you know everything. And it's very important. There are 3 in number. 1, 2, 3. So when I get there, I'll let you know under the recognition. Then number 4, you need to know the measurement. Measurement. Also tell the examiner that it simple means how to obtain the value. So the word measurement in accounting or financial reporting simple means how to obtain the value. And the word recognition means how to record it. Okay, so how to record and how to obtain the value. These are the 2 sections. Then we go to the last section. That's the most important ones that we have to look out for. Disclosure requirement. Disclosure. What needs to be disclosed under intangible assets. So these are the 5 sessions that we need to go through. These are the areas that are critical to our examination, plus the 3 items that I will treat here. The 3 items that the research, pitches, and non-pitches intangible assets, and then the research and development cost. Okay, so that is the game. So let's kick. Now, when we talk about the objective, I think we've talked about it already, to prescribe the correct accounting treatment of what? Of intangible assets. Now, scope. Before I go to the scope, we need to know the definition of what? Intangible assets. And all of them are stated in this. So I will not do the scope now. We have to know the definition for intangible assets. When we are done with the definition for intangible assets, now we can give the scope. Scope simple means the coverage. So let me go straight to the terms. What is intangible assets? Intangible assets. Intangible assets. Now, when you mention intangible assets, as the name suggests, intangible, asset that lacks physical qualities or physical features or physical substance. Good. So that is it. So let me define the intangible asset. The definition. That is that intangible assets is nothing by an identifiable monetary assets, non-monetary assets. That is the intangible assets. So let's put some few points down. So when I ask you to define intangible assets, that is that they are what? Identifiable. Identifiable non-monetary assets, non-monetary assets without a physical substance or character. Substance or character. Substance or character. So any asset that do not have what? A physical character is what? An intangible asset. We need to understand these terms very well. You know, when you have land and building, let's say you have motor vehicle. This motor vehicle, it is what? It has a physical character because you can really see the motor vehicle, yes, you can really see, touch, and then probably have a feel of it. Good. But some of the they only exist in a form of receipts or papers. They don't have a physical character. That is the intangible assets. So any asset that do not have what? A physical character, we call it intangible asset. Good. Now, we mentioned non-monetary. You should understand this one, non-monetary. Non-monetary, it does not mean that we cannot measure in monetary terms. No. Non-monetary simply means the asset will not be converted into cash. No, the asset will not give cash. Let me give example. Those who are doing public sector accounting will understand this term very well. When I mention financial assets, for instance, something like this. Financial assets or monetary assets. Monetary or financial assets. When I have investment in shares, if I have investment, it's an asset, but this type of asset is what? Financial asset or monetary asset. It's in a form of money. At the end of the day, I'll receive money because if I have invested in your business, then I have to recoup my investment. But if I have, let's say, a building, I have a building. Building is an asset. However, it is what? Non-monetary. Why? It is non-monetary. And in public sector accounting, We call it what? Non-financial assets. In public sector accounting, we call it non-financial assets. That is all. So now capture the difference for me. Just capture the difference for me. That financial assets or monetary assets, they're in a form of, at the end of the day, you receive money. But the non-financial assets, you don't receive money until probably you dispose them off. So you should take note of their monetary. So monetary assets are money held in assets to be received in a fixed determinable amount of money. Yeah. So like fixed deposits, treasury bills, all those ones are what? Monetary assets. But the intangible assets that we are talking about, they are not monetary. Nobody will give you money at the end of the day. It's not an investment, no. So that is it. Now let's list examples of what? Intangible assets. Assets that do not have a physical character. They are identifiable. Please, the word identifiable means those that exist. Those that what? Exist. Yes, if it does not exist, please don't add it to it. We are begging. And the rest of the terms, as and when we reach there, I will explain them. If I explain them here, you might not understand it. And all the terms, we need them at certain points. When I read there, I will explain it there. Good. Because some of us are probably new to the system. So we are done with the definition for intangible assets. Let's give examples of intangible assets. Examples. Assets that do not have a physical character. Number one, let's talk about license. So put it down. License is number one. License is number one. Good. So number two, goodwill, patent, copyright, trademark, logo, deferred government expenditure. All of these are what? Intangible assets. So license, I mentioned license first. So you can also talk about number two, goodwill. Number three, logo or patent or copyright, intellectual property. Can also talk about number four, deferred development expenditure. Very troublesome guy. Deferred development expenditure. We'll explain all this in future or subsequent sections. Okay, so basically these are there are more examples that we can probably talk about. Okay. Now we are done with the main terms. Let's go to the recognition. The recognition of intangible assets. We said that recognition simply means how it must be recorded. So tell me how we should record intangible assets. How we should record intangible assets. So recognition of intangible assets. How we should record what? Intangible assets. So recognition of intangible assets. Now, intangible assets, as the name suggests, assets. So tell the examiner that intangible assets are recorded as a what? As an asset if the following two conditions are in place. So they are recorded as assets if the following two conditions are what? In place. That is the intangible assets. So intangible assets are recorded as what? Assets if the following two conditions are in place. So let's look at them. So are recorded as an asset if the following condition has been satisfied. So one, so we call it the recognition criteria. They are the number. If it is what? Probable that future economic benefit will flow from the asset to the entity. That's the first condition. It must be probable that this assets or this intangible asset will produce some kind of inflow for the organization. That is all. Condition number two, the cost involved. The cost involved can be measured reliably, or the cost of the asset can be measured reliably. So let's make it the cost of the asset can be measured reliably. These are the two conditions that need to be there before we can record an intangible asset. Okay. Now, there are special intangible assets that we need to look out for. This is the main recognition criteria. But there are some special types of assets that we need to look out for. Special type of assets that we need to look at for. Okay, so we have some special assets that have a little challenge with their recognition. So let's look at them. There are three. I mentioned them that there are three. 1, 2, and then 3. If you're able to understand these three items very well, then you are fine with that of IAS 38. The rest are basically the same as what? IAS 16. Good. Now the IAS 38 is just a twin brother of IAS 16. And their cousin is the IAS 40. Good. Okay, so we have some specific types of intangible assets that have a little issue with the recognition. So those ones, we single them out and then we trade them. Good. So some classification that we try to examine some types or classification. Types or the classification. Now the first one I'll look out for is intangible assets. Intangible asset with definite useful life. With what? Definite useful life. Useful life versus and what? Indefinite useful life. Indefinite useful life. Some of them have a definite life. We give example of intangible asset like what? License, like goodwill, like patent, like copyright. Good. Some of these assets I've mentioned, they do have a definite life. Some do not have what? A definite life. That is all. How do you do those ones? Good. Then move on to purchase. Purchase intangible assets versus what? And self-developed or internally constructed or developed intangible. In fact, if you see IA, please, no shortcut in exams. Let me do it that way. All of them are in two folds. There are two issues. So we should know how we should treat them. Good. The last one is research and development cost. Research and development cost. Good. So there are three special intangible assets that we should know how we should treat them. They come with a little issue, a little challenge, and that is what we need to know. If we really understand this section, these three areas, when we sleep well about intangible assets. Yes. Good. The rest is the same as IAS 16. So if you do understand IAS 16 very well, the rest are the same. The only difference is this section, because these ones have a special treatment. These standards have special treatment, this section. So I'll take them one after the other, and then we'll do justice to it. So first, we will look at for intangible asset with what? Definite life. Intangible asset with definite life. Intangible assets with definite life. It means that that asset have what? A useful life. You know the useful life of the asset. It is fixed. 5 years, 10 years, and then the asset will be scrapped off from the books. Fine. How do you treat such assets? So tell the examiner that intangible assets that have a definite life, it must be amortized over the life. Amortized means it must be depreciated over the life. That is all. So if I should look at it, tell the examiner that those that with definite life, it must be what? Amortized over the useful life. We are done. What about those that with what? Indefinite life. Indefinite life, tell the examiner that we don't amortize them. No amortization. No amortization. Instead, you test for impairment annually. You test for what? Impairment annually. Good. I'll give you practical examples. So here, no amortization, but you test for impairment annually. Now, intangible asset with definite life. Example is what? License. License have a definite life because some of the licenses, if you acquire it for 5 years, 10 years, like license to produce certain drugs, license to operate, license to probably work. Even professional licenses, some of them have expiring date of 1 year, 2 years, and 3 years. Most of the professional licenses need to be renewed every year. So the life is what? Just a year. That is it. Indefinite intangible assets. You can talk about what? Goodwill arising from business combination. Goodwill arising from where? Business combinations. For example, goodwill arising from business combination. BC, no shortcut. If you acquire the company and then you pay so much as goodwill, here that goodwill will not have a useful life because the subsidiary company, but you acquire the company for life. So there will not be any definite life. So now we are done with the accounting treatment of the first type of intangible asset. The first type, some of them, they have a definite life. It's like you buying a land. Your own land that you've acquired, that's not how useful life. You can't tell the land will last for, let's say, 50 years. You will go and the land will still be there. Yes. So the same thing as any asset that do not have a useful life, don't depreciate that asset. We don't depreciate it. But rather we test for impairment annually. So take note, and the same thing applies to this. Let's go to number 2. Specific assets and their treatment, intangible assets. We look at those that have a definite life, a fixed life. Number 2, we have what we mentioned purchase intangible assets versus what? Internally generated intangible assets. This one, it must be recorded as assets, straightforward. It must be recorded as what? Assets. So take an examiner. Purchase intangible assets should be treated as what? As an asset. So it must form part of your assets. It should form part of your assets.